The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today's topic is, what setup have you mastered? What easy money-making trading setup have you mastered? In the playbook, we specifically talk about focusing on 90-10 opportunities, and that's about eliminating out garbage trading, trying to trade markets, which is why most traders lose consistently over time. We've put together a model that over time I have tried to piece together a process that worked for me, and identifying opportunities for 3-day setups and 3-session setups. And that culminates by understanding the opening range and initial bounce each week in the market, using trigger days, signal days, and then trading setups that can help target those opportunities when they present. And so instead of trying to trade a market every day, I'm just hunting out easy money-making trading setups that show up every week in the market where I know I have an edge. And when that edge presents, it's a simple process. I'm looking for simple triggers that help me identify a market that may be potentially setting up for a pump and dump or a dump and pump opportunity, a 3-day or a 3-session setup. So on the front side of the week, and we'll talk about that in a moment, we can have a trigger, a breakout close. We can have a signal day or no signal, or we can the following day have a signal day, a market that has gone into consolidation, and then we can either have a setup or no setup in our timing window. We can have a market that sets up but moves in an earlier session. So for example, we could have a first red day opportunity that trades in London. And so when I come to my New York session, that opportunity has already moved on that particular instrument. So for example, we have a market that has closed in breakout on gold on Tuesday. And when I come to my New York session, this market has already traded down in the London window, the Europe-London window. So again, I mentioned training your eyes to move horizontally. The train has already left the station on this instrument in the London window and offered me no trading setup on Wednesday on gold. Or another example where we have a breakout on the Aussie dollar on Monday, a first red day signal on Tuesday. But when I come to my US window again in my session, this market has already moved and does not give me an opportunity to enter in at a level, as it has already left the station. However, a similar opportunity, the same signal, the same breakout, first red day consolidation on the British pound did give me an opportunity in the US session. So again, timings, levels, behavior of price. This market gave us an opportunity for a first red day trade in the US session, whereas the Aussie dollar gave traders in the London session an opportunity for a first red day trade. The instruments gave us the signals, the setup and the signal, and then depending on the session, the timing, and the behavior of price, traders had opportunities in both London and the US session for a first red day trade on Wednesday. Hunting out setups. Don't worry about trying to trade every market or to try and trade every setup. I'm specializing in hunting out easy money-making opportunities that show up week in and week out. They're scalable in size. It's important to understand that when markets break out, so classical charting, Peter Brandt, the turtles are all based on breakout trading strategies. And a common axiom known is that most breakouts fail. The turtles would take many successive small losses, as Peter Brandt talks about. 80% of his profits come from 3 or 4 large trades that move in the year. Many small losses, 3 or 4 markets that break out and continue to trend. Now, there are 3 things that markets do. They will break out, pull back, continue to trend. They will break out, pull back, and reverse to the other side. Or they don't break out and they trade back and forth inside of a trading range. Now here's an example of a market, the Dow Jones 30, that broke out of a trading range and continued to trend. It pulled back, broke out again, and continued to trend into our new week, breaking out again and continuing to trend until reversing on the last trading day of the month after 3 days of breakouts. This is silver from this week, and this is an example of a market that broke out, consolidated, gave a first red day signal, and reversed. It started the auction process Monday morning from Friday's closing price, and it ended the week right back where it started. Breakout, pullback, and a reversal example. The Euro Canadian from this week is an example of a market that on Monday established the opening range for the week, the high-low initial balance for Monday, Wednesday, Friday. And it traded inside of that range, broke out, but did not break out and close, broke out during sessions and traded back and forth between that high-low range established on Monday, day one, the opening range of the week. So my question again for traders is, what setup have you mastered? Instead of going to a market or to a bunch of charts every day trying to figure out where you can get a trade, what setup have you mastered? Keeping it simple, rinse and repeat process that helps you identify candidates out of a basket of instruments on any given day or over the course of the week that will help reflect the opportunities that can occur in the main session that you're trading. And sometimes, for example, I have the opportunity to trade at least one Asian setup during the week, which is in the evening for me. The next morning in the Southern Hemisphere is an opportunity for me to look for one great trade opportunity on a basket in the Asian session. Other traders may have that same opportunity in the London window. And of course, the instruments that I will hunt out, including the currency pairs, for a New York session 3-day or 3-session setup opportunity. There are only two types of setups. There are pump and dumps or dump and pumps, whether it's a 3-day or a 3-session setup. This can occur in any session, as I just mentioned. We can have opportunities that will present for traders in the London window. I hunt out one great opportunity for a 3-day setup in the Asian session. We had a few opportunities this week in the Asian session for a 3-day template. Monday, Tuesday closed in breakout. We had a first red day signal at the close of Wednesday and a parabolic setup for the Asian session on Thursday morning for the pump and dump. So again, the question I ask traders, what easy money-making setup have you mastered? This is a scalable opportunity. We get one of these or two of these every week in the Asian session. This is just one opportunity that I can hunt out to complement the other opportunities that will show up in the U.S. window. Now, the simple model is this. A market that closes in breakout, consolidates, it will give me a signal day for the parabolic dump. Breakout, consolidation, reversal. And the same process can apply to the dump and pump template. A breakout close, consolidation, a first green day, and a reversal trade. The same opportunities can apply for a 3-session setup. First hour can break out. This can happen on a news catalyst. We can consolidate into the second hour. New York Open fits the US window, and the third hour can give us the dump or the reversal trade opportunity. And the same process can apply to dump and pump 3-session opportunities. This is the Euro Australian from this week. We had a market that closed in breakout on Monday, and on Tuesday closed as a first green day. Just coming back and reviewing the opening range, Monday day one, the opening range for the week, the initial high-low. Tuesday forms our initial balance on the front side. That two boundaries, typically by the end of the week, one of those will tend to hold as one of the extremes. Day 3, Wednesday, is our midpoint range of the week and resets to day 1. So day 1, day 2, day 3, we can look for parabolic opportunities on day 3. Reversals or trend trades, and that resets to day 1 heading into the backside of the week. Thursday's day 2, and of course Friday, the closing range of the week, which we often refer to as free cash Fridays. Major red news on the calendar can alter different types of templates when we have high impact events such as non-farm payrolls, which we have this coming week, and the Fed, to name two really high impact news situations that can affect our templates. A simple model, front side, back side. Bill Lipschutz, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. 3-day templates can offer large scalable opportunities. What type of weekly template am I in? Which setup have you mastered? Which setup are you hunting? So for traders that were hunting out a first green day opportunity on the Euro Australian on Wednesday, day 3, traders had an opportunity to have starters in the market. And as the London session neared the end of the third hour, this market had coiled sideways to give traders an early opportunity for a parabolic reversal trade. Universal entry criteria was met late in the 12 candle window. But as an example, day 1, day 2, signal day, breakout close, signal day, consolidation, and a parabolic reversal opportunity on the Euro Australian. Day 1, day 2, day 3. If we look at the larger template again at the close of the week, Monday's high, Tuesday's low have held as the extremes for that week. Day 1, breakout close, first green day, and a reversal opportunity on day 3, Wednesday. Silver, we just showed silver's chart. It broke out and closed in breakout on Monday, day 1. Tuesday, day 2 also closed in breakout. Wednesday closed as a first red day. Understanding the bigger principle, though, that Monday broke out, Tuesday also closed in breakout. So now we have breakout traders above the high of Monday's high of day level. Now we hear different understandings about trap volume and 3 levels of rise, and it's just a simple process of day 1, day 2, day 3. We have 1, 2, 3 days now of markets. Up high, we have a first red day signal. We have a market that has made a lower low of day level prior to pumping up. It's inside, but we have a market that's in breakout. So remembering, if most breakouts fail and we're hunting out a setup, pump and dump or dump and pump. There are only 2 types of setups. Which setup have you mastered? So when we come into our Asian window, we now also have closing price from Tuesday up high. Think of your entry point as last night's close, Paul Tudor Jones. We now have a box of volume potentially trapped underneath of closing price. You're either long at closing price or you're short at closing price for other time frame traders. Reviewing a simple template again, where the high of day and low of day from yesterday's levels are established by other time frame buyers underneath, other time frame sellers above. And the auction process that starts on Monday morning begins from Friday's closing price. Each day we have a closing price that is put in place at the end of the day, the end of the trading day. But when the week starts, we start from Friday's closing price. And when we trigger other time frame traders into the markets over the larger templates, that's when these opportunities can present. This breakout level is that if this market breaks down, all of these traders up top who are trading potentially are being caught up high. Basic model for trade entry criteria, page 29 in the playbook, gave traders a fantastic parabolic opportunity for the reversal trade after the first red day signal. Again, a pump and dump template on a smaller time frame that is part of a larger 3-day pump and dump template. Now, one question a trader asked recently was, is that 5-minute setup enough? Coming back to understanding the larger template, other time frame traders are driving this move. We are entering into a larger time frame opportunity on a smaller time frame template. Day 1, day 2, day 3. One of the other opportunities we speak about in the playbook on page 51 is 3 days of longs or 3 days of shorts in the market. Trigger days, 3 days of breakout traders, 3 days in either direction, can offer traders a signal for a potential parabolic trade opportunity setting up. There were a few opportunities this week that presented, not only on the indexes, but oil. We'll look at that in a moment. We have, again, a market that triggers. We get a breakout close on Tuesday. That market continued to drop lower on Wednesday. And just looking at this chart, again, if I mentioned training your eyes to move horizontally, the market has already moved away in breakout. When we come to our New York session, no opportunity on this instrument. 2 days of breakouts, closing on Thursday in breakout again. Day 1, day 2, day 3 of breakout traders in the market. And just on our 30-minute time frame, other time frame traders who were patient, who waited, had the opportunity for the parabolic explosive reversal trade on the last trading day of the month on the Dow Jones 30. And day 1, our breakout day, on Wednesday when the market broke out again, most breakouts fail, our parabolic reversal comes right back to Tuesday's low of day on a dump and pump template. Wednesday is the midpoint range of the week. Day 1, day 2, day 3, a parabolic reversal trade on Free Cash Friday. West Texas spot crude also was an example. We had a breakout close on Monday. Day 1 breakout traders in the market. Day 2 closes in breakout on Tuesday. Day 2 breakout traders in the market. And parabolic blow off on Wednesday, triggering 3 days of breakout traders in the market, which gave traders a fantastic reversal trade heading into our U.S. session that closed as a first red day. The first red day trade after inventories gave traders a shorting opportunity on Thursday, day 2, and a parabolic continuation trade on Free Cash Friday. Understanding other time frame traders are driving this move. We had our inventories candle. When we're down low and the market pumps up for the dump, we have other time frame traders driving this move all the way back down to the lowest closing price from the previous week. Friday's closing price started the auction process up. Day 1, day 2, day 3, signal day, first red day, consolidation, first red day trade, and first red day continuation trade on Free Cash Friday on West Texas. A larger pump and dump template. Train your eyes to move horizontally. Levels, high of day, low of day, closing price. Always think of your entry point as last night's close, Paul Tudor Jones. Regardless whether you're trading Asia, London, or New York. Behavior of price. Which setup have you mastered? Master easy money-making setups. Start with one. Have a basket of instruments that will potentially offer you those setups on a weekly basis. Sit and wait for your best setups to present. Day 1, day 2, day 3. Reset. Day 1, day 2, day 3. Trade money-making setups where you have an edge in the market. Swiss franc gave traders a fantastic opportunity in the Europe window and end of Asia Europe window. Closed in breakout on Tuesday. Again, a signal for traders. If we back this up to our longer time frame, we can see the previous low of week level. Closed in breakout on Tuesday, day 2. Monday's our opening range. Tuesday forms our initial balance. Friday's closing price potentially now acting as a ceiling. Day 1, day 2 on Wednesday. Day 3, Thursday. A 3-day setup. A variation. 3 days. Tuesday, Wednesday, Thursday. Page 31 in the playbook. Heading into our Europe window, we already have universal entry criteria met on our longer time frame, giving traders an easy money-making pump and dump opportunity on Thursday on the backside of the week. Not only did this market collapse and break out, it closed outside of the previous week's low of week level in breakout. Heading into Free Cash Friday, that breakout close is a potential signal now for an opportunity that could present for either a continuation trade on Free Cash Friday or a reversal opportunity. This gave traders an easy parabolic collapse after major red news, back through the low of the day, low of the current week, a low-hanging fruit trend trade continuation opportunity. Page 96 in the playbook. Also, again, a simple pump and dump template. There are only two types of setups, pump and dump or dump and pump. Gold offered traders a first green day signal day heading into Friday, Free Cash Friday, from a larger dump and pump template. High of the week made on Tuesday, day 2. The market reversed in the London window on Wednesday, trading lower in closing in breakout at the end of Wednesday's session. That's a first red day signal, a engulfing day, a day that closes in breakout. It's the first red day after 3 days, Friday, Monday, Tuesday, and Monday, Tuesday, both closing in breakout. That gave traders in the Asian window, Asia-London window, a short trade back to the low of the week that reversed and exploded back up, closing as a first green day heading into Free Cash Friday. We had major red news at 8:30, and the market was coiled sideways, establishing an initial high of the day and bouncing off of closing price and consolidating at closing price level heading into the 8:30 news release. The news catalyst gave traders a first bounce trade opportunity that was worth 100 pips of first bounce trade opportunity. Page 101 in the playbook is always part of a larger time frame template. This gave traders a full range expansion as a profit target opportunity in the first hour, heading into our second hour for 100 pips of parabolic news momentum catalyst opportunity, which is a stop hunt back up into our London shorts from Wednesday's day 3 reversal. Now, the same process can apply with any market once it breaks out on a 3-session opportunity. Now, we've talked about this repeatedly with gold and many markets, that third hour often gives traders that opportunity. A breakout, a news momentum catalyst can offer that on several instances. We can see that many times where the market will break out on a first hour news catalyst. 8:30 can be at later different times, but we have 1 hour out. Second hour consolidates. Third hour reversal opportunity on a 3-session setup, whether that's a pump and dump template or the same thing for a dump and pump. 1 hour breakout, second hour consolidation, a third hour reversal. And occasionally it may be an inside hour and a fourth hour reversal. And we saw the same thing repeat yesterday with gold. First hour broke out on news, second hour consolidated and broke down at the end of the hour, engulfing the breakout. A large death candle consolidating, and our third hour continuation in the short direction. At the beginning of that third hour, several traders took this opportunity, which traded back down to the low of the week. 1 hour breakout, second hour consolidation, and a third hour reversal. And also just keeping things simple, the low of day and the new high of day established in our first hour news catalyst breakout, our third hour is underneath of 50% of that day's range after the breakout. 1 hour breakout, second hour consolidation, and a third hour reversal back to the low of the week on gold after major red news. Asking again, what setup have you mastered? These setups show up every single week. If you understand how to hunt them out, they're easy money-making trading setups, rinse and repeat, trading the same setups on any instrument week in and week out when they show up. And closing out, hindsight pays. If you have a simple rinse and repeat process to identify easy money-making setups where you have a 90-10 edge in the markets, all I do is hunt out the same setups every week. I don't try and trade markets where I have a 50-50 chance of being right or wrong. I want to trade the exact same setups where it's easy to make money in the markets. Focus on mastering 1 or 2 simple rinse and repeat scalable opportunities where you have edge in the market. Be willing to sit on your hands and be patient, hunting out the best setups, and when they present, executing them in the session that you're trading. Have a basket that reflects those opportunities, rinse and repeat, scale them up in size. Keep it simple, traders, and may the markets go with you.